So
We did
we're
audit
just going,
planning and risk assessment last weekend.
okay. So we're just going to be moving on to internal control. Internal control, is different from internal audits. So I'll say that when I take you this statistical will come and take you audit evidence and sampling, and then I think I'll come back for substantive tests now. But yeah. So I think from where we talked about from our internal audits, we kind of talked about internal control. So when you say internal control, what do you think it means? How is it different from internal audits that you know? So I'm listening. I'm listening. How is it different?
Good evening. Hello, good evening.
Hi, good evening. Good evening.
Okay. Internal control, the slight difference between control and audit is that controls are measures set in place to ensure strict adherence and compliance to company's policy and or regulation. While audit is basically just reassessing and ensuring that what is required or what is supposed to be done is actually being carried out.
Okay. I think you have captured it well. So there's one that is these are the rules, Abby. And there's another one that is I am checking to make sure that the rules are being followed. If I get you right. Right? Ahmed.
Yes.
Okay. So
Basically,
if you get that, then there's no need for this class. That's a lie because there's a serious need for this class. Okay. Wow. Okay. Okay. So internal control. So internal control is a process designed to provide reasonable assurance regarding some objectives. What are the objectives? Four different objectives. Effectiveness of efficiency or operations. Okay. So let me highlight. So normally they tell you that internal control is the whole system of control, financial or otherwise, set up to achieve the following. Now, what are the following? Effectiveness and efficiency of operations, reliability of financial reporting, compliance with applicable laws and regulation, and then safeguarding assets. So your internal control rules are supposed to be outlined to achieve these four objectives, right? Also, we said that internal control, as defined in accounting, is a process for assuring the achievement of an organizational objective in terms of effectiveness, efficiency, reliable reporting, compliance with laws and regulations. So it just means that it is an action that is the responsibility of management. Management are the ones that are supposed to put it up. So when we say internal control, what are we saying? Number one, you need to lock your homes, your like when you lock your homes and your vehicles, and when you protect yourself, right, is you doing a certain level of internal control for your own activities. So next we have is so now so we already know all these ones for personal. Expecting your children to ask for permission, you checking your bank statements. Is there anybody here that check their bank statements to check whether their bank is debiting them? Is there anybody here?
Yes,
Is
now
there
for
anybody here?
paydays now.
That's a no. When I say check, I mean reconcile. This
Yes,
money, who is
of
this
course.
Olusegun?
Uh,
Okay. So you do it.
yeah,
How many of
regularly.
you know how much charges your bank charge you in January?
Yeah, I know.
You know,
Yeah,
you used to sit down and calculate it.
of course.
Wow, that's good. That's good. That's a new one. Some of you are like looking at it, the people used to calculate. I've told you now. So we said, so we said in our place of work, we also have internal controls like putting passwords, making sure that our purchase cards are like when we buy anything, the source documents we're getting are intact, making sure that management reports aligns with our support documents. Management report should not be saying the company is having financial crisis when from your source documents you are seeing that they are making money. Next, we have check management reports against source documents. So, and then you want to lock your drawers. So all these ones are just personal things that we do. And they're just telling us that internal control. So, what I want to say. So now I'm moving on to what we call components of internal control. Components of internal control. Now, this has an acronym called CRIM. CRIM. So it has an acronym called what's CRIM, CRIM. So the first part of the C is control environment. What is the control environment? This control environment is the entire system of internal control, or they call it the attitude of internal control, the attitude of management towards internal control and its importance to the entity. So that is the control environment, right? So it's management that will set the tone. You can't carry something on your head more than the way management has put it. If management is not saying that safeguarding their assets is a priority, how do you, a cleaner, want to safeguard their assets, right? You can understand what I'm trying to say. So your control environment is an attitude, the attitude and the priority that management places on internal control in itself. That is what control environment. Are you guys with me? So I said the acronym is CRIM.
Well, with you.
Yeah, with you.
Okay. So yeah, the C is raised to power 2. So next we're doing the arrow. Now the arrow is risk assessment. So after management said that okay, analyzing this risk is a priority for us, the next thing we're going to do is that how is this risk a priority for us? Like if this particular thing should materialize, what would the influence be on our business? You understand? How do we mitigate against it? So it's also a management function. If anybody here that did CSME or I've heard of CSME, in CSME we had a portion of the course that was risk management that tells us that okay, this is how you manage, this is how you respond to different risks. And they will tell you that risk management is also a management function, right? You cannot leave it to your external auditors. Then I is information system. So another major component of your internal control is that you need to put in place your IT system in this age and time where you have software, you have your infrastructures, your assets and things like that. Your people are also your people are also your assets that you need to put in place. I will check that they are achieving the objectives that you want them to achieve, right? Procedures, data, right? All those things are your information system. You get. Then we have control activity. Oh, sorry. We have M, which is monitoring. Monitoring is now saying, how do we monitoring is like an after effect, right? So when they say you're monitoring something, it just means that you have outlined controls. How do you make sure that the ongoing activities align with the controls that you have set in place? Right, so that's monitoring. So you're assessing the design and operations, and if there's any ongoing activity, right? If there's any ongoing activity, is it following the outlined internal control? Monitoring is just saying that if we would implement internal control, we can't just leave it as a rule and then continue with our lives. Even after we have deployed the control, we must start to do what? Analyze and see that the control has been implemented. So the policies and procedures that help ensure management directives are carried out. Okay, so the last C is control activities. We also call it control procedure. Now, what does it mean? It means the efforts of your employees or the activities that are carried out by your employees. Sorry. So these control activities are the activities of employees as it relates to internal control, following the control environment, right? So that is the component of internal control, which is CREAM, So do we understand?
Yeah, very clear.
So control, let's say it together. Control environment,
Risk
control
assessment.
procedure. Right. Okay. So let's say it's in that order, right? The order I explained it is the order in which like they hold weights. So control environment, risk assessment, information system, monitoring and monitoring and what monitoring of controls, and then control activities. Yes. So those are the components of your internal control system. Now, another exam question is types of internal control system. Another option is what types of internal control. And again, we have an acronym. What's our acronym? Papa Mosas. So types of internal control. The name is what? Papa Mosas. So what's P? The first P is personnel controls, that says ensuring the engagement of suitable and competent staff to discharge their duties with complete integrity, round pegs in round holes. It just means you must align personnel control must be in place where you have staff members that replicate what you are trying to portray as as a company. I was watching an Instagram video of a lady that said that there was a guy that resumed working at a restaurant, and she was sitting out with her friends. They were having like brunch, and she just saw the guy carried like a carton of Fiber Life juice, and he turned it into his mouth, and he was shaking the carton. And then she was watching him, and then she now called him to where her friends were, and she said, "Okay, can you hear me?"
We can hear you.
Yeah,
We
can you hear me?
Yes, we can hear you, ma.
So moving on. So she now saw the guy turning the juice container in his mouth. So she now called him to where she was with her friends. She now said that, good afternoon, that she sees that he's here. Is he just joined the company? She now said yes. She now said that, that what was he doing with the drink? He now said, it was just small that remained inside the container. So he was working at the bar. It was just small that remained inside the container. So he was drinking the remaining so that he can throw it away. So the woman now said, when juice resumed, he now said he resumed this week. He resumed this week. Like, well, let's say today was a Wednesday, so he resumed this week. She now said, did you do the 2 weeks training before you of effective resumption dates? He said, yes. She just said that, okay, no problem. And then she said that she told her friend that she was going to lay him, let's go of him. Her friends were like, oh no, that's where training comes in, that's where grooming. She now said that in 12 years of running a restaurant, she has learned that there's some battles you fight and there's some battles you don't fight. An example of a battle you don't fight is people alignment issue. And this was a people alignment issue. Today, it is fiber alive that remains small. Next tomorrow, it is drinks that have not been opened that he will carry and take home and tell you that his family member, they are hungry and they want juice. And I was just thinking about how much misalignment in personnel that she would have suffered to now get to that point. And then she starts talk about the fact that it's only Nigerian employees that will be working in the kitchen. They'll be making soup for the restaurant and they'll be carrying the soup home. They'll be carrying the soup home that her eyes are seeing different things. So basically, personnel control is just ensuring suitable and competent staff. And that's why you see that some very international organizations, their recruitment looks very tough, right? Just because they are trying to make sure that they streamline the individuals that get into the company. So the A is arithmetic and accounting control. So this one is just making sure that all transactions are checked for arithmetical accuracy and that they are correctly processed in your QuickBooks systems. The third one is physical control. Physical control. So the physical control is making sure that your company's assets are being safeguarded. Number 4 is authorization and approval, which is that all transactions are duly authorized and approved by responsible officers. So authorization and approval is just things like, how if you use QuickBooks, when you approve something, it will write it that this particular user approved this thing at this time. Even if you use Oracle NetSuite, that's one of the things I really like about it too. You will see the approval time, you will see the trail, right? When this came to you as a request, when you approved it. So authorization and approval is very, very good when you're trying to check it with making sure that people follow the right procedures before funds are being disbursed. So next we have is management controls. So management control, they are exercised by management. Okay, management control, they are exercised by client management outside day-to-day function in the establishment, the setting up of an internal audit department. So the setting up of your internal audit department is to check management. How? You know that these rules are put in place by management. Who will now check the activities of those management members? Is your internal audit guys, right? So it is like where they will be making sure that because you're the one that sets the rule does not make you above implementing that rule. Okay. So next up, we have organizational control. This is the use of organogram. It's just a control that is put in place to allow people to understand their roles and responsibility and their lines of reporting. This is who you are supposed to meet for this. This is the flow chart of this. Like now, I work in finance, and one of the issues that we used to have is, let's say somebody in communications. Okay, so I was saying that organizational control is just an outline of, so I work in finance. One of the issues that we used to face is that, let's somebody from another department, the person wants to engage a vendor. The person will now go and engage a vendor independently, maybe not use procurement department or something like that. And then before you know, we are having issue of, they'll not send a invoice to finance. So what I want to say, I'm sorry. So just they will not send an invoice to finance and say, oh, pay this invoice. And then we're like, sorry, this vendor is not on our database, it's not registered anywhere, pay which invoice, right? So if they know about organizational controls, if they know about their clear lines of reporting, who they are supposed to report to, if they know about the clear lines of reporting, who they are supposed to report to, and how basically power is being like the hierarchy, then you have few instances of people overriding the power that they have, or people not going through the right organogram when communicating or allocating responsibility. So the next one is S, the first S, which is supervisory control. I went no. Okay, but let's consider supervisory control. Supervisory control is just saying that you want to make sure that there's a supervisory system. There's an evenly distributed control network. So you can either choose to have like slim and narrow, where you have two managers managing a small group of people, or you can have like what they call this thing, wide, slim, and you are like a narrow kind of supervisory plan, or you can have like a wide supervisory plan. So for the wide supervisory plan is the one that one person manages about 20 people on the team, right? That's a wide supervisory plan. While a narrow one is that you keep your supervisory like diagram, right, really small, so that they can actively see what this person is doing, and then they can be able to give feedback, and then that they are benefit of the both styles of supervision. But just to make sure that what somebody is checking what another person does. Let's not be that client is asking for something, apart from the person that created that thing, no other person is there to review it. Next, we have acknowledgement of performance. So acknowledgement of performance talks about it follows the authorization and approval. So when you approve something, there should be a signature, there should be your initial, there should be rubber stamp. When you go to the bank to go and do small deposits, you see how many times they are stamping your paper, right? All those things are them acknowledging that yes, this thing, we received it, and we're the ones that processed it. Then we have segregation of duty. This one is one that you would use even in practical every now and then. Segregation of duty just talk about the fact that no one person should be seen completing a transaction, right? No one person in the organization should be starting a transaction from start to finish. It gives room for fraud. So you want to see how, like now, let's say a request comes to finance, there should be a review of that request, and the person will now send it to the finance manager for approval. It's when the finance manager should approve. You should not have who you call like a disburser. That's the person that will pay the money to the vendor, right? Just so that it is not that one person that receives the request, pays the request, approves the request and disburses it. If there are errors, if there are things like that, it should not be pointed out. Okay, so that's what they're trying to really emphasize on when we're talking about segregation of duty. And then we have Papa Mosas B. So what is the B? B is budgetary control. All of these controls they will not exist if you are not able to manage your money well, utilize your money well, and put operational costs within limits, right? So that's why they added this B. So budgetary controllers make sure that there's an active effort to check your actions against the budget that was set up, right? So that you know when you're overdoing, you know the areas of underutilization of your budget, and basically how to manage it. Okay, so that is your types of internal control. Now you see these two things that we have just done in the first 30 minutes of this class. If you check 10 times that they've asked internal control, 5 inside they will ask these two things. Because like I said, it's a skills audit. It is not heavy on like case study of what happened. They're just asking you direct what is questions, and they want you to provide responses, right? And they want to provide what is responses. So just knowing these two acronyms and with the hope that internal control comes out, you have already held on to about 25 marks already. But you want to make sure that you know it very well. You can explain it, right, in the exam. So a lot of the other things I'll be saying now, they're just things that you should know, right? You see them in your exam, not as frequent as you will see the other things I just listed, but it's fine. They also discuss CATs, so CAT is really important and it comes out. But I'll just try to limit what I'm saying just so that you're not overwhelmed. Okay, so next up, we're moving on to, okay, so how does the auditor now use the internal control? Basically, when it comes into the entity, he wants to understand the type of their internal control, and then move on to understand the potential misstatements, mistakes that can happen, the risks, the effect of all these misstatements, and design all these procedures that will help him to spotlight all these errors, right? Like now, maybe he says something like, okay, in your finance manual, you have said that there's a three level payments. And then I come to your department, I say that there are only 2 people. So if a three level check for payments and there are only 2 people, that means one process is either being skipped or one person is doing the work of 2 people, right? So all those things are the things that like they are giving him insights as to the kind of misstatement that he should, the kind of errors that he should expect. And then he will now design his audit procedures to suit into the nature of that client's activity. Okay? So now, communicating internal control. The auditor has no duty to report weakness on internal control to shareholders. Now, as I said, what is the objective of an auditor? To comment as to the truth and fairness of the financial statements. The reason why it's even getting to internal control is because everything is based upon like every financial posting is based on whether rules are being followed. So the best way you can check whether the posting is correct is to check whether the rules that have been outlined have been followed. So this means that now you don't have any responsibility. However, you can give those that are charged with governance something that we call audit matters of governance interest, like the one that affects the board, right? So you can send them a document, talk about the scope of the audit, things that affected like accounting policies, adjustments that could have had material effect on the financial statement, material uncertainty that cast doubt on their going concern, material weaknesses in internal control, and questions regarding integrity and fraud. So this one is like in recent cases, what do we see? So they can just kind of give this to the board that, okay, this is what we spotted out. These are the kind of conversation that you guys want to start having with yourself. Now, how is this communication done? They have to decide on the clear format of their communication at the beginning of the audits, right? When they are planning their audits. And then before the report is issued to the board, you may first want to discuss all the matters you outlined in that audit matters of governance, right? With the board. And then if they have any questions, all of that, before you like give them the signed reports. Also, we said if possible, matters should be discussed to the audit committee or to those on the board if there is no audit committee. Okay. Then we have, how do you now communicate third-party interest in the communication? So occasionally, some other people may say, oh, I want this information that your board also has. So you want to make sure that either the report has been prepared solely for those people that requested, or you have asked management and they said that, yes, we accept that this report be shared. But what are the things that we should bear in mind? Number one, the report has been prepared for the entity. So it is not like, don't take it like as if we're working for you. We'll do it in the best interest of our own clients. It must not be disclosed to third party because, like now, let's say your bank is requesting for a particular statement. Note that we didn't do that statement for the bank. We did it for our clients. Number 3, no responsibility is assumed by the auditor to another person. Like I'm just trying to really emphasize on the fact that You can't come and say, this report that you gave me does not answer the question I have. Is person just reply you that I didn't do the reports for you before, right? So that's basically the way to communicate with other people outside the entity on like needed reports, just to know that you don't have any responsibility to them. Now, another exam question is limitation of internal control. And I would like, because this is the table, I'd like us to take it one by one and just explain how it can be a limitation. Internal control sounds very excellent on paper. If everybody should apply Papa Mosas, we'll not be seeing somebody in First Bank stealing 41 and be 40 million. You guys remember that story. So you will not be seeing all of that, right? So it should be sweet if everybody just apply Papa Mosas. But what do you think are the limitations with internal control? So you can just use the one in bold to kind of explain yourself. I'm listening.
Okay. The threats, can I say management override? You want me to explain it?
Yes, please. Yes,
Okay,
you
you
can.
can, yeah, and from my own understanding, management override the auditor, especially the internal auditor. I'm sure they would not want to override that of the external auditor. You can make a report and they can apply undue influence to override some of the write-up. They can tell you to touch it up a bit. I think that is it. To fall in line with what they actually want you to present. I don't know if
Yeah.
that's what this addresses. I don't know.
Yes, that's what it addresses. You can make your reports to them. These are the
Yes.
things I'm saying. These are the areas that I think we need to cut down on our operational travels.
Yeah.
We need to reduce our sponsorship, or you're in
Training and
finance.
stuff. Yeah.
Hey, you're in finance, you're seeing some things. I mean, one of the issues I have is like all this allowance, because I work in non-profit. So you see like some allowances that go to like some people. And then you're asking questions, right? Like, what does this translate for us? Do you get that kind of thing? And then someone just saying that, all these things are like things to keep us in the loop and all of that. But I'm like, this money is even almost meeting your running costs, right? Like your daily operational expenses almost. So it's just, so a lot of times you can have all these questions, but if the management does not think that it solves any problem for them, you continue, right? So another person, you can take two.
Yes.
Okay.
I
All right.
take human factor, human error. Hello?
Okay. Yes, I can hear you.
Yes. The human error is just that despite all measures put in place, there can still be mistakes, unintentional. There can still be negligence from the officers, from properly carrying out the measures that were put in place or that were supposed to be used. So human error generally does not really mean that I want to put measures up, there can't be any loopholes again. No, you can still have loopholes from officers put in charge of those measures to be carried out to prevent fraud, to prevent mistake. There can still be mistake. That is what I have to say concerning human error. Thank you.
Okay. Yeah, all
Let
of
me,
us are human. Okay,
can
I
I
can
speak
hear
to
you.
substance over form?
Yes, please.
Yes. Means some entities, you will seek the control that they presented to look very standard, very commendable, but you just see that in implementing it, it lacks substance. For example, they will tell you for procurement department to acquire any asset or purchase any or carry on, they must obtain 3 invoices. If you don't supervise very well, the
Yeah.
unit can tell the vendor they want to to favor what others have done, and one person can actually produce 3 different receipts and still perpetuate the act. So sometimes a well-designed internal control system, the implementation is what matters. So sometimes it looks so good, but implementation is zero. Yeah, I think that's what this means.
Okay, yeah, that's very relatable because a lot of time control looks good on paper, very excellent on paper. But how can you say that I must get 3 coats? I want to buy water dispenser. You're saying that I will get 3 coats, so I should go and engage a vendor, make them to give me invoice. Then I will now stop responding to them. Abi, what exactly do you want me to do? So yeah, there can be all those things. Okay, conflict of interest.
And
Conflict of
some
interest. Anybody taking that? Yes, anybody can go, please.
for conflict of interest, I want to use an example. In most organizations now, staff are made to sign forms for conflict of interest. So when you allow your personal interest to override that of the organization, for example, you work in a brokerage firm in an insurance company, maybe your spouse or family member is a broker, and you are a direct office, for example, an insurance company, and then you want to give businesses, you focus, or because you have interest in that, you favor that one more. So in summary, when you allow your personal interest to override that of the company, it becomes a conflict of interest.
Yeah, very
When your
excellently.
loyalty is divided,
Yeah, excellently put. Then failure to anticipate certain risks. Sometimes management can be focusing on, and I always say that it's management job to be passionate about the objective, right? But as a finance person, it's for you to always do like always help them to see why the numbers are important. So if anybody has ever worked for a startup here, you see the person trying to drive the startup goal. Oh, this is what we want to be. You say the 7 wants to be the biggest business in Nigeria. But like, the one that is looking at it that way though, I know you want to be the biggest in Nigeria, but I've not secured much salary. Right? So if management is not able to have is to be forward thinking, it can also limit internal control. To just look like me, I always say that what happens most of the time is that you now see maybe you have a problem with your neck, but you're applying aboniki to your leg because that is what because that is what management is choosing to focus on. Okay. So because they're not taking it as a priority. Then we have collusion. So collusion is when 2 or more employees do not agree on a style of internal control. And it's more dramatic when they are top managers. When the organs are fighting, it's grass that used to suffer, right? A manager thinks that it should be done this way, another manager thinks it should be done a certain way. And then because the 2 of them are not able to agree, sometimes you don't even apply any of control. Like you don't end up applying any of the control. So moving on, mitigating controls. So this one is just that controls are already in place. What does it mean to mitigate against internal control? Mitigating against control. So mitigating against control just means additional controls that are put in place to help reduce the risks associated with failure on some internal controls. It just means having proper detail of your transactions, after the fact approvals, periodic surprise checks. So this one is just saying that okay. So the mitigating against controls just means putting in place like strategic reviews as well, on the controls that you have put in place. You want to check, is this reasonable in this age and time? Is it a control that should be in place? Like now, if you're in the organization and they're still using Excel for approval in this age and time, you want to check whether your control is actually solving the immediate needs that your entity has. Okay? So moving on, recording the internal control. Recording the internal control. So this one means that how do we now translate? So this is what your internal auditors will be doing. How do we translate the controls we have and how we are following it, like where we are in terms of making sure that the controls that we set in place are being followed? So that I don't overbore you. There are 3 major ways, but let me read this. The auditor must gain an understanding of each of the 5 elements that make up a client's internal control system. This enables the auditor to carry out an evaluation on the system and to conduct a audit risk assessment, whether it will be system or transaction based. So this one is system based, is when he can rely on the internal control because the internal control is good, it's being followed. Transaction based is if from his analysis, from his preliminary analysis, it says that, okay, he can't rely on the entity's internal control. The auditor's work on internal control is therefore an important element of gathering audit evidence because it influences the direction that the audit work could take. As with all other significant audit evidence, it must properly documented in your audit working papers and even in your audit file. So this one now is the external auditor that has come. You see the external auditor? Yes. The external auditor that has come. How would he, if he wants to capture his thoughts on, let's say, PW, or let's say category internal control, the activities he can use. Either he uses narrative notes, a system flow chart. See him? I'm coming. Okay. So just know that it's 2 ways. Is it that the company already has it in place? Do you understand? Like in capturing what the internal control is, they can already have this thing in place, and then the auditor will now use this for his decision, or he will be the one to come and even capture it the way he wants. So I will not overdo all these things. Narrative notes just means capturing your internal control in writing, just having like a 50 pages document. All our papa must ask, you now write all the rules down. That is narrative notes. What is the advantage? It's very simple. Just carry out your control and put it in ChatGPT and tell it to give you manual. Abi, it will do it fast. But what are the disadvantages? When they did this, there's no AI, so they say it can be time consuming to prepare. It can be long, and also it is hard when there's a system change. Let's say, for example, you've already done that document and I've already shared it to all the staff members. Imagine when you want to just change approval limit. Let's say you want to change approval limits from let's say you want to change approval limits from 5,000 to 1 million. The board will have to sit again and everything. So that is the downside to narrative note, but it's the easiest form. Abi? Now, systems flow chart is just, think about a diagram that just shows you the flow of everything in the organization. You will just have it in connection. This goes to this goes to this. So it's more descriptive, it's more visual, right? And then you have it for all the types of your transaction that shows how the document is decorated, is attained, the various departments. So it's just like as if like something that you develop by your tech team. You understand? You ever worked somewhere that they have, like when they are onboarding you, they may show you their flow chart. Okay, this is how we work, right? So they're like, okay, that's the second way you can record your internal control. So what's the advantage of this? Because it's in diagrammatic form, it's very immediate. When you look at it, you can see the high points, the low point, and all of that. But and even from an overview, somebody that is experienced can even see the deficiencies that already exist. Oh, this is a weak link. Let's do this. Let's switch this one and all of that. But what are the disadvantages? One of the disadvantages is that you need expertise to even be able to deduce a flow chart. So when I think of flow charts, my earliest memory goes to ATS2, IT. How many of you did ATS? Most of you don't do ATS because you come from like your BSc. So I did ASWA, and in ATS2 we did IT, and we had to draw flow charts. So that's what my memory goes to. I think we did it in university too, but I don't think it was that deep like, as much as we did it in ICAN. Yeah, but like basically you need skills. Rectangle means something, rhombus means this. How many of you have ever done, how many of you have ever used flow charts before? Circle means another thing. Am I talking to myself?
No.
People should help me. I've been in meetings since 3 o'clock. Eh?
Yeah,
How many of you you have used flow charts before?
Yeah, no, this child they used to show workflow.
Yes.
Yeah. Yeah, that's the one.
Continue,
Okay.
please.
Eh?
Continue, please. Continue, please.
Okay. Next is your questionnaires, right? So I was saying the downside. The downside to your flowcharts is that you need knowledge, and sometimes you need knowledge, and that it does not really talk about how we measure the effectiveness of the control. It just tells us what the controls are. So that can be an issue in itself. And it may not be appropriate for documenting specialized areas of accounting where they are like, accounting has all this. If this is what's happening, do this. If this is what's happening, do that. So the third way you record your internal control is questionnaire. This questionnaire, there are two of them. We have what we call the internal control questionnaire, and we have the internal control evaluation questionnaire. So questionnaire is widely used by the auditors. These are the external auditors. What they do is that they will come with their questions, and then you are required to answer those questions, and they'll give it to like staff members to answer, like a survey. From what the staff members will feel, it will help them to deduce the level of compliance that the entity has with the internal control. So internal control questionnaire, it is designed to establish whether appropriate control exists that meets specific control objective. So for the difference between your internal control questionnaire and your internal control evaluation questionnaire is that your questionnaire is just like when you fill normal questionnaire, like all those things you fill online. You only like 5 for strongly agree, 1 for strongly disagree or something, and then you're just filling in numbers. So in your internal control questionnaire, they'll ask you, do you ask your supervisor before you disburse payments, or you have access to disburse payments without asking? All he needs to pick is yes or no. So he will now pick up, and based on the number of the yeses and the nos, he will now have a review of the strength of the internal control present in that entity. So what are the advantages? That is relatively simple. It's an automatic template, so the author can just bring it. But the issue is that the issue is that it can become lengthy and time consuming. That time there was no all this AI when they first introduced all of this. But if you use a Google form, you get your answer almost immediately. So this disadvantage has been solved for. So how do you use your ICQs? Basically, he will check last year, do it on this year, and see, are there improvements? Are there still area of weaknesses that you need to focus on? Yeah. So the internal control evaluation questionnaire is majorly like a development of your internal control questionnaire. In this one, the auditor will be asking key questions. It won't be like a lot of questions that they had in the ICQ, right? They'll have shorter questions for which answer is yes or no. The question is really designed in a way that the answer is yes, so it indicates good control, and no indicates bad control. Though the ICEQ typically produces a document shorter than the ICEQ suffers the advantage of less being precise. So in your ICEQ, they will have asked specific questions. And is there a ERP system that is used for approval? If the answer is no, you just assume that they're not doing segregation of duty. Do you understand? So it streamlines the amount of questions that they will need to, and the amount of people said that needs to fill it, right, than your ICEQ. Moving on, what now happens? What does the auditor do with this information? The essence of this information is that it helps him to now see the level of control that he can do on that client system. Not to bore you, this material is there, it's less than 115 pages, so you can always go and read it. The essence of this is that it helps him see whether he can do a system-based audit or a transaction-based audit. And this is what we call audit approach in our AAA. So if the controls are effective on paper, does it mean that they're effective in practice? And if they're effective in practice, what does it mean that they are being followed? If all the answers to those questions are yes, then you can do what a system-based is with the thought process that if your system is correct, your posting will be correct. If anybody that's practiced an accountant here for a long time, if your system is correct, your posting will be correct. But if your internal control system is faulty, there will be misrepresentations, misstatements, errors in your FS. But transaction-based, they call it transaction-based substantive testing, different name over the years. It just means what? I can't rely on your internal control, so I'm going to move on to do what? Substantive test, which is a detailed, right? I told you this part, I'm highlighting it. Which is a detailed audit on, like, you are basically checking more transactions like than you should ordinarily if you accept that internal control is weak. So moving on, I want to talk about what we call a management letter. And I'll say something about this that may contradict themselves, but I will explain. A management letter is a letter that is a report typically presented in a columnar fashion, in columns, like it will have a table and then there will be columns detailing weakness observed in the client's internal control system. Remember that though this classification of internal control is a byproduct of performing your external audit rather than the objective. So management letter is one of the things that when they've done your audit, you also get. So you get the audited statements and you also get the management letter. Now, this is where they'll tell you that an advantage of audits is that it helps you review your internal control. Because that management letter will be all the weaknesses that you are seeing in internal control, all the things that is pointing out, with the viewpoint that when it comes for his next year audit, he'll first go and check a management letter. All the things I told you people to improve on, has it been improved on? If no, if I qualified your statement last year, best believe you are going to collect another qualified statement again this year. Because I'm seeing that you people are not learning, right? So that's just basically it. So, but something I've said in this class may kind of contradict this. And when we're talking about communication with those that are charged with governance, if you notice, that one is just calling the attention of like big guys in the firm. Oh, these are accounting policies that will have affected you. These are matters that could have disrupted your going concern, right? Like all these kind of things. So that's the difference. That one is like a conversation with the people that are in charge that, okay, it's the kind of things that we think people should pay attention to. But your management letter is a direct letter of what? Weakness. So they just used to call it what? Letter of weakness, detailing observations in your internal control. Okay. Now, the second aspect of this chapter is where we're going to talk about the IT. Is where we're going to talk about the IT part of our audits. ICAN says that by the time you think about this IT parts, you know everything in IT. And when they say, oh, we integrate information technology, this is what they are trying to say. But I will try to simplify it just so that it is straight to the point. And you see more of these questions in your past question. You see them, yes. This chapter of your exam is one place I know that questions comes out from every diet. Every diet, you get a question about IT. Every diet. So, and explaining this thing is so somehow because some of them are outdated, but I'll just try. So the first one is microcomputer system. This is the use of desktop. So if anybody works in a bank here, So these are like the use of desktop, and it can be advantageous because it's more cost efficient. And basically microsystems where there's like a central system that like gives everybody server, that kind of thing. So there are advantages and disadvantages. Of course, disadvantage is they can't work out of office, is not decentralized. So what are the risks that it poses? You may have to now be thinking about the physical security of these microcomputers, connection issues, storage media. Like if there's a central computer that is giving everybody server, the moment that central computer crashes, everybody can be suffering. It's the wide access availability of most systems issue a problem with authorization. Yes, see the IT guys always trying to escalate things because there's so much that you can do from like a microsystem. Programs that are being written or modified by a user, like somebody can just, because it's like a central processing thing, if any change is done from like the central end, it can disrupt what everybody is seeing. And then the auditor should have to now check whether it was like the software they use is like specifically made for them, or if they're just using a generic system. So simply put, microsystem is like way back in terms of where we are now in technology. So it's just there's a centralized computer, and then the centralized computer is feeding all other computers. So something that is more up to date about our online system. So it's basically like a computer-based information system that allows us to hold central, like information is held centrally, but they can all be edited through remote channels. A good example is your Google. The moment you have a company's login and you are on their OneDrive, you can see all the documents that are there. If you make a change to an Excel, whether somebody is in London, they are beside you, everything, it transmits in real time. And it was very important that we get to this point, because that's where we started seeing opportunity for people to withdraw with their ATM on other banks, right? Because when they first introduced that, people were asking that, what if I have money in my account and I quickly go and withdraw it in this bank? Will my bank know? So it's basically an online system. So data is being centrally held and centrally updated through remote terminals. So that the benefits, there's immediate entry of transaction, immediate updates, and inquiry system. And the way the inquiry system works, more like everybody that's connected on that server can respond to your question. So those ones that, something happened, tell you to go to your bank, those kind of things, no. Because we all have access to like this data, we can like respond in real time. So now, with this our online system, generally, there's something that we call general control over your computer-based information system, and there's something we call application control. So general control is the general control for your computers, physical security, making sure that nobody can make changes to the data. All those things are general controls, whether it is your office or your personal. Those are things that you have to put in place. Okay? Yeah, you want to make sure that there's a trail when you do anything. Like, I like Google so much that when you come to a sheet, you can see the different versions. When this person changed this number, all those things are transaction logs. They call them audit trail. What's an audit trail? Is the ability to follow a transaction through from the beginning to the end to see all its processing. So that's an audit trail. So you want to make sure that your general controls, there's a trail that is being left, and firewalls are also important. Firewalls are like safety from unauthorized access. So things like viruses, and viruses can come in different forms. All those strange links that they send to you, strange invoices. You want to build firewalls. So all these things are like specific. Like the moment you have a computer, you have to start putting in place all these controls. Please, this is an exam question that can come out. Now, what are application control? Application controls are now controls that are streamlined to a particular application. For context, the application control for Zenith Bank app is different from application control from Stanbic Bank app. Zenith Bank will ask for your account number and your PIN. I think Stanbic Bank will ask for there's no, like there are some banks that you use username and password. There's some banks that you use account number and password. So the pre-processing authorization for different applications varies. That's to tell you that it is a control that is specific to that application. Then when you have a particular application, you also want to do program checks for that application. So you see all those, there's a new version of this app, those kind of things. Yes, all those things are program checks. And you also want to check balancing. This is the checking of controls of data that is submitted before and after. You want to check that your data that is being updated, like that is being computed, is being updated real time. That there are no errors, all the kind of things like, in Nigeria, we see things as date, month, year. But in the US, they do month, day, year, right? So those kind of things, you want to make sure that it meets your specific needs. So just think about it that general control, what are the controls that are in place simply because I have a computer-based information system? That's your general control. Application control, there are 3 of them. Access pre-authorization control, program checks, and then we have what? Balancing, right? So I think there are 5 in your general control. Access to the system, pre-programming controls to prevent unauthorized changes. Number 2, transaction log in form of audit trail. And then I think number 4 now, firewall. So there are about 4. But you can look at your pack, maybe. I think when you look at this 5, there should be 5. So there are 5 of the general control, and there are like 3 of your application control. Now, the last one is EDIs. This is the most realistic one. That's what. Yeah, online system are also very realistic. Like when you break it down very well, you see how they are realistic. But EDI is the transmission of machine language into readable formats. The easiest form of EDI you can think about when you go and buy something from supermarket and they just use that barcode to scan, and they give you a readable receipt that even you can understand. That's EDI. So EDI is a system that allows you to transmit business documents into like purchase orders, invoices, payroll. So in some organization, their payroll is even done in terms of employee number. Just employee number, blah, blah, blah. The system will spool it out, right? So where do EDIs operate? Within an organization or external? Within an organization, like in your organization, you have something that converts data into readable formats for you. Or externally is all this payroll, where you are shopping, vouchers. In EDI, transfer documents are automatically entered into the computer system, and they are being sent in the receiver form. However, what are the issues with EDI? There can be lots of audit trail. I mean, I've ever gone to somewhere to buy something. The guy was already inputting your order. The order now cleared on the dashboard, right? So that's a loss of audit trail. So that I just pay. I will log it, Abby. So those are instances where you are losing audit trail. There can be increased level of dependency on the computer. I think I was speaking to somebody, and the person was saying that in those early years, the glory about working in ShopRite, or the person that used to be like the best staff, were people that knew the prices of things, before barcode came, right? Those were the guys that were running things. But it has made some people redundant because I used to be annoying. I remember I've gone to a supermarket, you ask the counter person in front, how much is your water? Best say, I'm coming, please let me scan it. And then you're looking at that like, I don't understand. You don't know how much people sell water here, right? Because small sweet, small tissue. The person says, sorry, let me scan it. And you're like, you don't know the price of anything in this store, right? So, it's increased. That's are the issues with EDIs. It can increase dependency on computer systems. There's a risk of corruption of data. See, the one thing you're doing that is online that can be infused, like somebody can penetrate the system, already has a risk of corruption or loss of data. Security risks when you're transmitting the data from what is on the system to printing, there can be error, right? So those are the 4 additional problems that EDIs may create. Now, what are now the solutions? What should the auditor do to now minimize these risks that we have seen in our EDIs? Number 1, it should put control over transmission. So things like inscriptioning, acknowledgements, authentication codes. So all those people that are in those counters, you see that they will have to, when they want to log into the system, they will have like a generated password. All those things are controls over transmitting data, monitoring and checking out outputs. In Nigeria, we still use that security man that will be checking inside a nylon. But abroad, you can just place it on the scanner or something and to confirm that everything on your receipt is what is in your bag. Virus protection, that they have to also, just so that you don't lose data. And then contingency plan and backup. What happens if your system should go off? How do you plan to manage it? And then basically inscriptioning. This is translating your data into coded information such that it's only readable when it is being translated. Those are things like zip files. Is encrypted such that it's only when it gets to that particular customer's end, when they open the file up, that's when they will see it. So these are 5 controls that the auditor is putting in place. So the meaning of EDI, the problems it creates, and the controls. I'm very surprised that I'm seeing this here because e-commerce is not supposed to be here. But what's e-commerce? Buying and selling of things online. So what are they saying? If an auditor is auditing a company that is heavy on e-commerce, it's still the same thing. He needs to know their transaction. He needs to know the extent that the e-commerce space affects his client's business. He needs to know the risks that can come up. Set up his internal control questionnaires and then try to make an effort into making sure like that he has proper, sufficient audit evidence as it relates to auditing that client. So something like this is where they will need an expert. They will need the service of an expert to help them break into the system better. So I already talked about system-based approach, right? That is called test of control. So what does it mean? I'll just reread what they have here. The auditor takes a system-based approach whenever it is possible. It focuses on testing the system and internal control that produces financial reporting figures rather than the figures themselves. If the system and controls are satisfactory, the figure produced by the system will be reliable. 2 conditions are necessary before the auditor can adopt a system-based approach. Number 1, the system and controls in place should be designed to minimize the risks of misstatements. Number 2, the system and controls should operate effectively. The auditor gains evidence that the controls operated, like, so it just means that if your system is intact, the financials will be correct. That's just what it means. What's this? Okay. So there's something I'm going to put on your chat that I want you guys to read. I'm coming. So we'll have that conversation next week. We kind of already had it in our audit planning, but maybe I should ask here. What is the difference between internal control in a large organization and internal control in a small organization? What do you think are the issues? What do you think will be the issues with establishing internal control in a large organization and in a small organization?
One is always more complex than the other.
One is always more what?
Complex,
yeah.
Yeah, the smaller one is less complex than the bigger entities.
Okay, and so because it is less complex, what happens? Is it usually weak or strong?
It should be strong.
In smaller entities?
Yeah, the control is stronger than the bigger entities.
No. So think of like okay. Now let me hear your thoughts process.
I'm looking at a situation where an internal auditor is trying to put control in place. Of course, I don't know. It should be her control should be stronger than having a big entity with many departments, where it becomes complex on the kind of control to put in place. That is my thought anyway, like of a layman. I don't know.
Yeah. So I get what you're trying to say. Valid as far you can control it more. You should be able to know that okay, these are the number of people I'm dealing with. So I can, if I tell you that Titi, most of for many receipts, right? And you didn't give me the receipts, why don't you give me, right? Because it's easier. But if an organization has 1,000 staff, it may not be easy to be following up with all those things. But thinking about it, controls in smaller entities are usually less sophisticated, right? Due and a lot of times, usually because of low manpower or lack of resources to even put things in place to require like that will require sophistication. For example, I've worked in a place where it was like just me and my finance manager. So, like I said, and your finance manual says that before you process payment, there should be 3 levels of approval. If it's only you and the finance manual, who will be the third person? So automatically you already see that because it's a small entity, there's already a level of control that has been eliminated. So basically what I'm just trying to say is that the major do you get the illustration
Yes, I
now?
do. Yeah.
So what I'm trying to say is that the first assumption that auditors make is that when you go into a small firm that has like slow number of staff, they're just kickstarting, the initial assumption is that the internal control will be bad. It will be poor. And then you usually resort to like substantive testing for them. Quite interesting. If you even ask people that are what I want to say. If you ask people that are in audits normally, they will tell you that even in Nigeria, the first assumption is substantive tests. Yes, no matter how big the company is, our trust issues is very high. So they don't really trust anybody like that to come and be giving them. The first assumption when you go to a company is to do substantive tests. It's only they now prove beyond reasonable doubt that we are worth the risks. That's when you. So the last thing we will do today is CATs, which is computer assisted audit techniques. These transaction circles, we'll do it when we want to start substantive tests. I will start from the transaction circle. But yeah, so CATs. What are CATs? CATs are computer assisted audit techniques. I don't believe that this is very I have so many questions when it comes to the efficacy of our material in our everyday life, but no problem. So they said CATs are supposed to help the auditor to generate audit evidence. So and we have what does it do? There are softwares that they can be customized. They help the auditor to trace, to develop expert system, all of that. There are 2 common use of CATs: audit software and test data. What are audit softwares? They are software that are being used to interrogate the client system. It can be packaged, like it's just a software you buy, or it can be made for you. Now, the problem I have with this is that they said that you will impute it into the client system and it will help you to interrogate the system. But at least 4 to 5 years that I've been practicing, I've not really seen that software. Has anybody really seen the software? I sure that there's software that they use to select samples and all of that, but I don't know of the software that they use to now put in the client system and allows them to interrogate the system. I don't know. The next one is test data. So test data is used to run like a check on transaction and then help you to bring out samples that are worthy of testing. So, or what test data actually is that it processes transaction by itself and compares it to the way the client system operated the transaction. Like now, it will check what should have been the standard procedure for this activity and what have you guys been doing. So that is what test data is used for. It's like do a compare results of your actual transaction and what the system has been doing. Okay, so we have advantages and disadvantages. Advantages of CAT are the advantages of computer. It's more clinical, it's more, so let's go over it. independently access the stored data without dependence on the clients. You can test the reliability of the software with test data. Increased accuracy because it is computerized. There's no man-made inputs. And it performs audit tests more efficiently, which on the long run can be more cost effective. Like I know the one that I use to select samples. So the system is that smart that when you give it transaction listing, it picks up the ones that are like one-off, the ones that look dubious, and it requires you to now like provide the samples. So these are the advantages of cards. Please, this is example. I told you the only thing I can tell you that I know will come out in your exam is this computer for auditing. So from that microsystem to this cards, be sure that one part of it will come out in your exam. It would. So its advantage is that it can be expensive and consume the setup and high setup time. Yes. If you've ever been part of when your company is buying an ARP before, it is very stressful because all the information that you have to build it into the ARP system. Number two is that it can be purchasing the software at first can be quite pricey. Developing the software can also be a stretch. And then you have to now keep it up to date. You'll be paying for updates. Then you now train your staff on how to use it. And sometimes cards can be very useless if you don't have staff that know how to use it. Just be paying for something and then it will not be useful. So what else? Yeah, okay. So all those one that we're explaining expensive and time consuming. Number two now is you may need clients' permission before you can access their information, which is what I strongly agree. Because I've not even seen it we said the one I know, that transaction list is the one I will give them. Not that they will come and put audit software inside your computer. Number three is potential incompatibility with the client's computer system. Very important. If you have people that work in the big fours, their system is usually very, very encrypted. They can't even watch YouTube, so then they can't put WhatsApp and all of that. So I don't really see how we want to be syncing systems. Number three is that the audit team may not have IT knowledge to even handle such complex data that the clients may have. And the last one, that can be corrupted or lost when it is being applied. So they're just normal disadvantages of computers, but you have to specify it. So computer-assisted audit techniques can be expensive. You will need permission before you can deploy. It may not be compatible with your clients. The one you have may not be compatible with your client's system. The audit team may not have relevant IT knowledge to explore the cards, and then the data can also face like corruption. So that's all about this topic. Quite a long one, is a stretch to be honest. One of those chapters that if you go into an exam hall and you say, oh, I know this chapter, you have done your work, you have done what is required. So we started as 12 and we're 6 now. So I think I'll just call it a day before you will beat me. Even me, I don't know how I've lasted to this point, but I'll just call it a day. If you have questions, please put it on the WhatsApp group. I know this video will go to YouTube, so let's have some WhatsApp group privilege. So if you have questions, you can put it on the WhatsApp group. I can always reply you. I know that I'm supposed to be sending past questions, but I also know that there's some people in this class that have those past questions. Please, if you have it, you can always drop it. It's not only me that came to this life to come and suffer. I think I sent for I've not sent for audit planning, and I've not sent for this one I just did. So please, if you have those things, just pull it out and just say, okay, it's time we tested this question. It's very important because it helps your colleague to read well, right? You just go directly to those places where it was asked and then just read it. So I don't want to keep you guys more than 10:30. Like I don't want to do it at all. So I'll just call it a night. Is that okay?
Yes, thank you.
So you're welcome. Have a good rest of your evening. Bye.
Good night.